Agent Orange is the new black. How about orange is the new green? The markets are higher across the board, but before you credit Netflix or the sea of green that we're seeing, perhaps some of it is being colored by one not that exciting piece of econo data, the September CPI, Consumer Price Index. This is an indication of inflation at the consumer level, showing that companies are finding they do have a little pricing power, and consumers are willing to pay for higher prices. Headline CPI jumping 0.3%. That matched estimates. Let's get right to the floor show. Our traders at the New York Stock Exchange, CME Group, and the NYMEX. Matt Cheslock. In essence, what that shows is that companies have the ability to implement some price hikes, and maybe people have a little bit more money to pay for them. That's a good sign, right?
I don't have any more money to pay for them, but, if we are going to, that's one thing the Fed has been, waiting for all along, is the inflationary number to tick up, and then that would justify the rate rise. So, I think the market has taken into account that we're going to get it. We're going to get it in December. Maybe we get that past us, and now we can start focusing on, are these bank numbers that we've seen over the last couple of days in the fixed income trading, is that more than just a one-quarter event? Are we going to see that going forward? So that's more important, I think, for the markets, at least from the equity side.
Yeah, and when you see that the Dow right now, which is up 84 points, had seen earlier highs of 130-plus points, does that worry you, or do you think, well, they're holding on to more than half of the gains on a day like this?
Well, this isn't really a big move either way. It's less than 1%.
Right.
The NASDAQ is the leader in it. There's some names, old standbys that, are really dragging the Dow down a little bit. So it probably should be up a little more than that based on some of the new economy names. So I'm not really particularly worried about this. This is earnings season. We're going to see some volatility.
Yeah, a lot of names coming out in the next couple of trading sessions. Larry Shover to the Fed, and I hate to keep bringing it up, but it really is what tends to move the markets the most. I see anywhere from 65 to 70% chance that we will see a rate hike in December, but in the short term, people appear to at least be picking up some good quality names that are on the cheap.
Yeah, and the interesting thing with rates going higher in December, there continues to be this rotation out of what I call low volatility stocks. IBMs, the Berkshire Hathaways, the Exxons, these are the big dividend quality names that people are paying for bond-like returns, and it's getting scary with this rotation. People are recognizing that maybe we should get into growth or get into value, especially growth, the Amazons, the Facebooks, etc., the Dollar Trees even, because relative to the low volatility stocks, they're pretty darn cheap. And we know since 2009, as we've made interest rates cheaper and cheaper and cheaper, those low volatility stocks have continued to increase in value.
Yeah, I think you're right. And then it's the energy names that we always seem to watch when they do tend to affect the markets. But again, even though we're above $50 a barrel, Elliot, once again, I see that Iran showed that their exports are holding at 4 to 5 year highs. So nobody's cutting back the calories here when it comes to output.
Yeah, right. Nobody's budging whatsoever.
Hold on, that's for
and
Elliot.
there's so many puts. Oh, I'm sorry.
That's okay. That's okay.
Go, Elliot.
Larry, take it. The truth is, Liz, you and I have talked about this many times about crude oil. There is a glut. There is no room. There's no reason to think that it's a buy at $50. I look at natural gas, which has also been spiking lately, and it's spiking on air, news. Iran says they're going to do this.
Why is crude moving to the highs in the aftermarket right now? Is there some news that I'm somehow missing here? I'm interested to know if you see anything, because it's starting to move back up.
I've actually been sitting here waiting, so I have not seen any news lately. But no, I believe honestly that it's sort of an irrational, emotional move. I see the same thing in natural gas. It could be a technical move, but fundamentals are all very bearish. There's plenty of oil. Even the OPEC, even the production cutback that they agreed to was a few 100,000 barrels in a day in a market that produces over 30 million a day. So I don't see how they justify an $8 rally. Crude is not going anywhere, in my opinion, at this point. It's going to stay $50 for the rest of our lives.
Yeah, and folks, when you see a line that says OPEC Secretary General says, throw in a little grain of salt, pepper, and cumin, whatever, everything else.
Seriously.
Good to see all of you guys.